I never really had the classic struggle. I had faith. Denzel Washington. My friends, each and every day, 10 to 15 minutes, be faithful. It will pay off. What have I been telling you for the last many weeks as the market has just spiked higher and higher and higher? Look at how we ended this week. I was telling you just yesterday. When is the end coming? When is the market rolling over? We saw a huge spike in volume down this morning, followed by more volume down in the afternoon. Average or above average in the morning, average in the afternoon. Look at the red spinning top piercing through that weekly trend line on the 2-day chart. Of course, it sunk through it big time in the afternoon on Friday. And the little green up candle turned into a doji, which means extreme indecision with all that volume down 2.70%. Let's watch this next week if we're getting set up for a big downtrend or if it's going to be a fake out again like we saw on the week beginning September 2, where we had a doji and then the market cranked up again. But all that energy and having it blown out that strong at the end of the week, let's wait, let's watch, let's see as we run the math on our 5-day plus analysis. Things have gone from very bullish to bearish, and that has happened just in the course of the day. But this is a big down day. For Bitcoin, 2.7% down, not all that necessarily big, but you think it's big. It is big on the S&P, but you think that's big. Look at the NASDAQ, down 3.47%. Now, we still have a green spinning top here, all that volume. We haven't pierced the weekly trend line yet, but you do have a red spinning top on the 2-day with all that volume. And you can see volume actually higher as far as above average, both in the morning and afternoon, unlike the S&P that was above average in the morning, average in the afternoon. So things really spiking down hard in the afternoon, 3.47%. That is a big down day on the NASDAQ 100. We will see how that translates over the course of this next week. But as we look back at mid-August through early September, we had doji. Looked like it was particularly that last doji, and average volume each time looked like the market could be ending its up move and then rocketed up for 4 more weeks. So we'll be particularly paying attention as to how this new week starts off. There's a catalyst to boost the market, or if things are going to just hammer down. But that is some huge down move on Friday on both of our stock indices, the S&P 500 and the NASDAQ 100. I've told you to be watching for a pullback, and we'll see as we get into this next week how things move. Now, what about 20-year U.S. government bonds? They popped up 1.61%. We had a green up week last week. This week, as things were moving along, you can see our two-day candles before we got to this latest Thursday, Friday. And again, bouncing off that weekly trend line. I haven't put a lot of hope in that trend line, but you can see on the half day, booming up in the morning and in the afternoon with all that volume. And again, as we look at things, bonds, again, getting more bullish. So more in a long direction. So that is good to see. Like I said, up 1.61%. We'll watch this next week as bonds continue to move. Now gold, which has been our big climber, just climbing again, friends, up another percent for the day. We have been long gold. We saw gold turning around back in late August, and it has just jammed up through September on here into October. I will tell you this, friends, watch out for this. I've seen this happen over and over and over again. If stocks do take a big tumble, if they take a big hit, I have routinely seen gold roll over and go down with stocks. Why is that? Well, I've heard it theorized, and I agree with the theory that people will have to sell off assets to cover shorts in the market. Now, I don't know how many shorts there are in the market as long as things have gone up, but don't just expect gold to keep going up if the market does indeed roll over and start hammering down. So keep your eye on things. Watch everything like a hawk. If indeed you are in any practice trades in any of these indexes, be very, very careful. And of course, if you are in the market in other things, then be very, very careful. We, of course, are an education firm. We do not give real market advice. I always give that caveat. We give you this advice for your practice trades. But again, pay attention, learn by doing. Lastly, we'll take a look at Bitcoin. Rolling back, strong. But again, Bitcoin is surging back and forth quite often. We saw Bitcoin hit its high back on the 6th of October. And of course, it shot up in the morning and the afternoon. And then we look at this half-day chart. It started spiking down on Tuesday, had a little bit of recovery on Wednesday the 8th, and then down Thursday and spiking down Friday. Candle going all the way back down to the trend line. We have a red spinning top. We haven't broken that trend line on the 2-day. The wick has on the half day, but not the candle itself. It's right there on it. You can see all the volume in the 2-day, all the volume in the half day, and the ever-increasing volume in the weekly chart. So we've got a pullback. We're going to watch this next week as we move along. Is it going to bounce off or penetrate on both the 2-day and the half day? And we'll see if Bitcoin gains a little further energy or if it continues in that pull down and parallels what's happening with stocks. That is where we are, my friends. A fascinating Friday as the market contracts severely for stocks, but bonds and gold up, Bitcoin pulling back. This is going to be a fascinating week, and the big pullback may be starting. We shall see. God bless, my friends. All the best from the whole team at Charting Wealth.